Well, while Nigeria remains a compelling frontier market for foreign investors, as we heard in the news headlines this morning, political climate certainly poses risks for reform from everything from the oil sector to the banking space. And with that, some are saying that we have many foreign investors sitting on the sidelines. How are you reading the political situation in the country at the moment?
Good morning, Alishia. I think that is the major issue. Aside from that, there's quite a bit of optimism, but the political situation introduces a risk element. There's the issue of continuity in government policy. There's also the issue that, should it all unravel? I think we've passed the critical stages. I think, the expectation is that a new cabinet will be put together very quickly. The ministers or would-be ministers have been screened and passed. So I think that is beginning to settle down. But generally speaking, people want to see the agenda that will be pursued. We're coming up to an election as well. Security issue still remains paramount as well. But generally speaking, I think that is the big question mark. Aside from that, investors that have traditionally invested in the Nigerian market are, are sort of, I would say, confident that it will be resolved in the medium to the long term. Institutional players, even foreign portfolio managers that are familiar with this sort of frontier market have continued to factor in the risk of investing in the Nigerian market.
Well, certainly that clear evident in the run that we've seen in the Nigerian markets over the recent past, and looking at where interest is being directed in Templeton's Frontier Markets Fund, we had Nigerian Brewries, as I mentioned earlier, ranking amongst the 10 largest holdings. We recently saw the company report a 9% gain in 2009 profit. What's your outlook on that stock in particular?
We remain positive on Nigerian Brewries. It's a mature company. It has stable management, and it's also very disciplined. I think the dividend payout, which tends to be high, remains a major attraction to institutional investors, and they also tend to pay interim dividends 2 to 3 times a year. So, with a dividend yield of somewhere in the region of between 6 and 7%, it remains highly attractive. It is a market leader with 55% market share, and it's always maintained a steady growth. We factor they should grow turnover top line somewhere in the region of between 10 and 15%, we would say.
Well, the consumer goods segment is just one of the sectors that's attracting a lot of interest. We've also got, and this when it comes to foreign direct investment as well, the fact that the economy has this infrastructure drive that it's fueling in the spotlight. And with that, we've seen in the news that Browtech, which is a foreign cement firm, has concluded arrangements to actually establish 8 cement plants in Nigeria. Have we seen any more development on that front?
Well, the foreign direct investment, the people who have, as I would say, institutional investors and generally companies that are familiar with frontier markets are fairly comfortable with the risk. I think a lot of people would be cautious about making additional investments at this point in time. There is huge demand, gaps in certain areas that would be filled, but everybody, every investor wants to ensure that, private properties, there's continuity, in government, and that the policies are clear, because, that is where you can be caught out. Inconsistent policies could affect your margins substantially. With regards to foreign, we've seen, a few in the last couple of years. We expect that they would increase as clarity, continues to get clear, as the picture continues to get clear on the political front. But generally, we've not seen a huge surge. I think the focus, as you've said, rightly said, has been infrastructural development, the government trying to drive that, the states themselves, trying to, develop their states and trying to raise various bonds in the capital market to ensure that they achieve that end. I think that will continue for some time. But once stability, everything settles down, I think generally, you would have a higher drive in foreign direct investment.